Welcome back. And today we are going to discuss about the recent announcement with regards to the Bank of England's base rate. So stay tuned. Welcome to Project Possible. This is Jito David. And if you are coming for the first time or visiting for the first time on our channel, please click on the subscribe and also the notification bell button. So then you receive all the notification, all the updates. We do videos Monday to Friday evening 7 p.m. And you learn everything about property. But today we are going to particularly focus on the Bank of England base rate. So before we go into the base rate specifically, let's understand why base rate is so important. How does Bank of England uses that as a very smart tool to keep the economy of the country or everything's in a control or in a tap? Who decides this base of Bank of England's base rate? Who are the people behind this? And how this impacts you and me in terms of our mortgage rates, in terms of inflation and things like that, and also the predictions. Where is this base rate heading in the coming months and years? So let's review that. So we'll go one by one and we'll tackle the base rate, everything about the base rate. So what is base rate? In simple terms, base rate is used by the central bank to charge the banks and the other lenders when they borrow money. Yeah. So the banks and other lenders, they borrow money from the central bank, and while they borrow that money, the base rate is that charge what they pay to the central bank. And that's what the base rate is in simple terms. Now, what is the application of that? How does that impact you and me? So when we are borrowing money for a mortgage for any personal reasons, so the base rate, if it goes up, we pay a higher interest to the banks or to the lenders. And from a savings point of view, when the base rate goes up, when you're saving money, you earn a higher interest. And when the base rate goes down, you're getting a less interest on your savings. So that's how the base rate plays a vital role within our economy. So who decides this base rate? Now we have a monetary policy committee within the Bank of England. They consist of 9 economists, and what they do is they meet at least 8 times a year. That is roughly around every 6 weeks. And what they do is when they meet, they spend whole day reflecting on the last 6 weeks performance or economic metrics, how the country is doing, how the economy is doing, and how things are, especially the inflation, those kind of things. And there is a whole set of people who work tirelessly for the last 6 weeks to make sure that all that data is correct and presented to the committee. And the committee will do a voting, and based on the vote they will decide they want to increase the base rate or keep it as it is or reduce the base rate. So the majority voting has to be there for whatever decision they make. So one of that exercise is doing a voting at the end of the meeting. So that committee plays a vital role. Those 9 economists kind of decides the future of this country and you and me. So it's very important role they play. As the world continue to battle with the pandemic, and as a nation we continue to battle with the pandemic, the Bank of England decided, or the committee decided, to reduce the base rate to 0.1%. This was a historical movement. It happened in March 2020. The committee decided to reduce it to 0.1%. Now, last December, so December 2021, after almost kind of 2 years, the Bank of England committee decided to increase the base rate from 0.1 to 0.25%. And one of the major factor is to regulate the inflation. Yeah, because the inflation is rising for the last 3-4 months. You can see we have hit one of the decades highest, or in the last few decades, one of the highest inflations we are facing right now. So to regulate that inflation, they decided to increase the base rate. Now, in less than 2 months' time, again, the committee has voted to increase the base rate. And last week, we saw the announcement of increasing the base rate from 0.25% to 0.50%. Now, let's reflect on the predictions. what's going to happen in the near future. From a predictions point of view, what we are seeing is that the inflation continues to rise. Now, in April, we are expecting the utility or the energy bills to increase by 50%, and that will have a ripple effect. And there are other things which will become costlier. Now, government in their level up plan saying that they're going to increase the pay rise for or the minimum wage will be increased, the minimum national insurance will be increased. So all those things are going to have a ripple effect on the cost of doing things or buying things or selling things. So this is all going to push or put extra pressure on the inflation. So we don't see any reason, any positive reason that inflation will drop drastically anytime soon. That trend will continue, and that means the possibility is the committee will vote for increasing the base rate again and again in the coming months. So, based on that kind of fundamentals or principles, we can see that in 2023, we might hover around just over 1% base rate. And by 2024, we can see a 2% base rate. That's how the prediction looks like at this moment. And I can back these predictions from the econometric models. They are predicting that in 2023 the base rate will be around 1.7, 1.75, and by 2024 the base rate will be around 2% or more. And that's what the financial models are predicting. So, and I can completely agree with that. We can see those base rates going up. So please click on the like tab. It does really helps with the logarithm of YouTube, and also share with your friends, with your contacts who like to know how the inflation, how the base rate, and how that impacts you and me in terms of the finances. And if you are into property investment, or you're a residential owner, this is something you need to really watch and share within your contacts, within your network. So please like and share. Now, how does base rate impacts you and me? Now, majority of the people in the UK or anywhere in the world, one of the biggest loan or a borrowing they have is their on their own house, or the mortgage, or the residential mortgage. Now, what the base does is that it increases your interest on the mortgage. So the mortgage has two elements: principal amount and the interest amount. So if you're doing a repayment, that means you're paying a part of your principal amount and your interest. So that interest part goes up when the base rate goes up. And if you're only having a interest only mortgage, then your interest rate, that's the only part you're paying, and that goes up. So that's the challenge we are facing at this moment. The only exception is if your mortgage is fixed for a longer time, like 5 years, 10 years, then this changes does not impact your outgoing at this moment. That's the only exception. Or else, if you are not on a fixed mortgage, you are on a tracker mortgage, you are on a variable mortgage, or any type of mortgage apart from the fix, the increase in base rate will start impacting you from pretty much end of March or early April onwards. And if you are on a fixed term for 2 years, 3 years, when the term comes to an end, then the variable standard variable rate will come into picture. That means you will start feeling the heat of the increased base rate in terms of repaying or paying your interest on your mortgage. Now, for a buy to let, it will hover just around 4 to 5%. For a standard variable, it will be around 2.5 to 3%. And that will vary depending on the banks to banks and products to product, the term of the mortgage, and so many other loan to value, and so many other factors. But what we need to understand is we will be paying a higher repayment or a higher interest on our mortgages. That means more money out of our pocket when it comes to repaying the mortgage. So that's what base rate has done to us at this point. Now, as I said about the fixed mortgages, please explore the options of fixed mortgages. If it is a residential property and you have no plans to leave that property in the next near future, or you don't have any plans to convert that property into a buy to let, then try to fix it for a long term, like 5 years, 10 years, So at least you know from an outgoing point of view, you got a bit control and stability. So if you have any questions regarding the topic what we covered, the base rate, so please post it in the comment section, and we will do our best to answer those questions or take it to our experts who will share their information, their insight. We do have our monthly live event. Our next event is coming soon, and all the details are in the description. So make sure that you attend our monthly live event where a property expert will share all their knowledge, journey, challenges, and you have an opportunity to ask live questions with the experts. So until the next video, stay safe, stay blessed. Thank you.